Para la lectura número 10 es la continuación del artículo. Recuerdo el nombre del artículo. How does digital finance influence corporate greenwashing behavior? Es como la influencia de la financiación digital eh, cómo influencia la financiación digital en el comportamiento del lavado verde corporativo. Entonces voy a continuar en 2.2, que es donde quedé en el anterior. Influence path of digital finance on corporate greenwashing. Digital finance may inhibit corporate greenwashing behavior through two paths, namely financing constraints and information asymmetry. First, from the perspective of financing constraints, digital finance integrates digital technology with financial services, which overcomes the shortcoming that banks need to set up institutional outlets. It breaks through the time and space constraints and simplifies the approval procedures of traditional financial services, resulting in promoting the convenience and availability of financial services. Second, the penetration and coverage of digital financial services bring a wider range of long-tail groups into the financial markets, absorbing the funds of many small-scale investors provides enterprises with wider sources of funding for green innovation activities. Finally, digital finance utilizes big data technology to obtain information related to enterprises effectively, which can improve the efficiency of information communication between banks and enterprises, help enterprises obtain reduce the motivation for corporate greenwashing. Overall, digital finance can optimize the financing structure of enterprises, effectively reduce financing costs, alleviate financing constraints, thereby reducing corporate whitewashing behavior and indirectly suppressing corporate greenwashing. Based on this analysis, we further propose the following hypothesis. Hypothesis 2A. The development of digital finance inhibits corporate greenwashing by easing the financing constraints that enterprises face. Another influencing path is information asymmetry. Digital finance can influence corporate greenwashing behavior through channels of information asymmetry. Specifically, digital finance is based on the combination of information technologies such as big data, cloud computing, and the blockchain with traditional finance, fully leveraging the information effect, alleviating the behavior of enterprises whitewashing their own environmental performance. Second, digital finance can effectively transmit, analyze, and utilize financial information, promote transparency of financial information, supervise the disclosure of true environmental information, improve the equality of corporate information disclosure, and ensure that corporate financing is invested in green environmental protection projects. Finally, digital finance utilizing big data platforms can monitor the flow of green funds in real time effectively, provide timely warnings for potential risks, enhance risk management capabilities, and help prevent companies from engaging in illegal practices or violations, thereby effectively suppressing corporate greenwashing. Based on the above analysis, we propose the second of our two research hypotheses. Hypothesis 2b: the development of digital financing inhibits corporate greenwashing by reducing the asymmetry of corporate information. 3. Methodology and data. 3.1 Model construction. 3.1.1 Baseline model. To examine the impact of digital finance on corporate greenwashing, this article constructs the following regression model. Entonces ahí están mostrando el modelo de regresión lineal. Where greenwashing defines the corporate greenwashing behavior of firm in year. DF represents the digital finance of firm I in year T. Control denotes other the control variables. E province and E industry are the province and industry fixed effects respectively. E is the random error term. 3.1.2 Mechanism test. Following the previous literature on method for mediation tests, combined with Model 1, this paper constructs the following regression model to further examine the mediating effect of SA and ASY. Entonces ahí está mostrando pues como otro modelo de regresión pues que examina pues el efecto, es examinado bajo el efecto. Bueno, where med denotes the mediators, which are financial constraints SA and information asymmetry ISY respectively. Model 2 examines the impact of digital finance on the two mediating variables. Digital finance remains the explanatory variable in this model, and the control variables remain consistent with their earlier discussion. Subsequently, Model 3 assesses the significance of the mediating effect. A significant mediating effect suggests that digital finance can influence corporate greenwashing through corporate information asymmetry and financing constraints. 3.2 Variable definitions. Depend variables. This paper uses corporate greenwashing as the explanatory variable. This behavior is primarily manifested in the selective release of favorable environmental information or the use of strategy expressions to whitewash environmental performance. Therefore, this article defines corporate greenwashing behavior as selective disclosure, selective reporting of environmental matters, and expressive manipulation. Strategy, expression, whitewashing environmental performance. Following Sang and Yu and Lee, this article constructs an evaluation index system for corporate greenwashing by defining 27 constructs from four environmental aspects: liabilities, management, supervision, and performance and governance. Then, the content analysis method is used to evaluate the 27 constructs. These 27 indicators are used to determine whether an enterprise discloses. Among them, if the information is disclosed, the disclosure content is used to further determine whether the disclosure is substantive or symbolic. Based on this determination, we calculate the degrees of selective disclosure and expressive manipulation. Entonces aquí hay como unas fórmulas en relación pues a eso que estaban hablando. Based on the calculated values of selective disclosure and expressive manipulation, the degree of corporate greenwashing is measured using geometric average. When greenwashing has a higher value, the enterprise is engaged in more greenwashing behavior. Bueno, aquí muestran una tabla de las variables. Table number 1, variable descriptions. Type: dependent variable, independent variables. Name: corporate greenwashing behavior, digital finance. Symbol for dependent variable is greenwashing, the F. For independent variables is the F coverage, the F usage, the F digitalizations. And definition: greenwashing, the F is greenwashing calculated using the content analysis method according to equations. DF Total Digital Finance Inclusion Index. DF Coverage breadth index of digital financial inclusion at the prefecture level municipality. DF Usage depth of use index of digital financial inclusion at the prefecture level municipality. DF digitalization level index of digital financial inclusion at the prefecture level municipality. Bueno, hablo de las variables de control y variables de mediación. Este es como el cuadrito, si lo quieren analizar. Some of control variables are opening margin. The symbol is gross profit, and the definition is gross operating profit revenue, return on assets is ROA as a symbol, net profit total assets. return on equity, ROE, as a symbol, net profit, average balance of shareholders' equity. Okay, etc. Mediation variables are financial constraints, SA, calculated using the SA index, information asymmetry, ASY, calculated by performing a PCA on LR, ILL, and GAM. Table 2. Descriptive statistics. Bueno, estadísticas descriptivas. Solo voy a leer como una línea, porque 1 o 2. Entonces, var name es el nombre de la variable. Greenwashing. Ups, supongo que es la cantidad de observaciones, que fueron 18.310, o sea, 18,310. Mean es como creo que es el promedio. Es like a percent, I mean, es como el 85%, 85%. Es I think is la varianza. I don't know, maybe 15%. P25, I don't know what's that. P75, P75, I don't know what's that. Mean is 0 and value max value is 90/80. Okay, this is a formula. Okay, in addition, following you et al, many scholars use ESG data to measure corporate greenwashing behavior. These scholars take the difference between a normalized measurements of firms' relative distribution of the ESG disclosure and real performance scores as an enterprise's relative greenwashing variable. A more significant gap indicates a higher degree of corporate greenwashing. Therefore, we replace the dependent variable with this new indicator, referring to the specific measurement method is as follows. Este es el método de medición que sigue. Bueno, una cosa ahí un poquito compleja. Where ESG disclosure represents the ESG disclosure score and ESG rating is the ESG real performance score. ESG disclosure and ESG rating are the average values of ESG disclosure and average actual ESG performance of all listed companies in China, respectively. ESG disclosure and ESG rating are the standard deviations of the ESG disclosure and ESG actual performance scores. We evaluate the corporate greenwashing level by accessing ESG disclosure score data. From the Bloomberg ESG database and ESG real performance score data from the Sino Securities Index Information Service. Independent variables. The principal explanatory variable is the development of digital finance, DF. This paper utilized the Digital Financial Inclusion Index of China. compiled by the Institute of Digital Finance at Peking University to represent the level of digital finance development. The index encompasses three geographical levels: province, prefecture level, municipality, and what? Uh, and country. Aquí muestran la tabla 3, baseline regression results. Aquí muestran también la tabla 4, robustness test. Bueno. For the primary explanatory variable, this paper selects the aggregated index of DF updated in 2021 at the prefecture level municipally as the proxy variable. Additionally, we incorporate three disaggregated indexes: coverage, breadth, depth of use, and level of digitalization as replacement for the core explanatory variable for robustness testing. Control variables referencing, and these study selective variables that may affect the greenwashing behavior of China's listed companies for control. They include the rate of return on total assets, ROA, quick total assets turnover ratio, ATO, current ratio, liquid management fee rate, MFI, return on equity total, ROE, asset growth rate, asset growth, operating margin, gross profit, listing period, list stage, and shareholding ratio of institutional investors. Ernst. Variable definitions are listed in Table 1. Mediating variables. Two variables examine the mediating effect in this paper, namely financial constraints SA and information asymmetry ASY. Financing constraints SA, we employ an SA index to measure corporate financial constraints. We follow Hadlock and Pierce to calculate the SA index. A firm with a higher absolute value of this I index is more financially constrained. Information asymmetry. We use three stock market liquidity indicators to measure firms' degree of information asymmetry: liquid, illiquidity, and reversal. Then we perform a principal companies analysis, and these three factors of obtain the information asymmetry indicator. A larger ASY indicates a higher degree of information asymmetry. 3.3 Sample selection. This paper selects a research sample of China's share listed the companies from 2012 to 2021 by province. A final sample of 18,310 was obtained to ensure the integrity and credibility of the sample data. We remove ST financial companies and insurance companies to avoid the impact of abnormal values. To avoid the influence of extreme values, all continue continuous variables are subject to a 1% reduction. The enterprise data in this paper are obtained from the wind and CSMAR databases. The regional economic data come from the China Statistical Yearbook. The variables descriptive statistics are shown in Table 2. Bueno, por acá nos dice en el título 2.2 como el impacto del camino de influencia de las finanzas digitales sobre el lavado verde de las empresas. Bueno, habla de que la financiación digital puede inhibir el comportamiento del lavado verde de las empresas, pues como de dos formas. Asimetría de la información y las restricciones financieras. Bueno, dice que la financiación digital utiliza Big Data para obtener información de las empresas de manera efectiva y hace pues un puente muy significativo entre las empresas y los bancos. De esa forma optimiza el proceso de financiación y reduce también los costos de financiación.